A shift in strategy. Why is housing finance banking on the middle class and the counties to drive growth? Good evening and thank you very much for joining us. This is the Trading Bell. Later on, I'll be talking to Eric Musau. He's an analyst from Standard Investment Bank and he'll be joining us here to help us understand how the market has performed in the last 1 week. But of course, for now, we focus on housing finance, and joining me in studio is Frank Ireri, Managing Director, Housing Finance Group. It's nice to meet you.
Nice to meet you too, Brian. Good to see you again.
Please.
Asante.
Good. Now, Frank, thank you very much indeed for joining us here. You've been around for close to 52 years now, right?
Yes. HF, yes.
HF, that is. You have seen the market metamorphosize into its current state now. Well, how do you, or what would you say about the current market that you operate in today?
I think currently, definitely, it is a challenging environment. And if I focus more within the banking sector first, and I can talk about property development, which are both part of our offering. Definitely from a banking perspective, challenging times. We have the interest rate caps. We have compressed margins as a result of that, but also an opportunity for us to now really innovate and think differently. We look at our business models differently, and then hopefully come up with something that is sustainable, but also cost effective. The other challenge I think we've seen over the last year or so as an industry, of course, has been the collapse of two pretty strong players, Chase Bank and before that Imperial Bank. And that has also had its own ramifications in the industry. So I'd say pretty challenging times, but also there's still lots of opportunities. Yeah.
What would you term as the biggest challenge facing the industry that you operate in?
What is the biggest challenge? I think it depends where one sits, because I guess for different players, you'd have different challenges. For some, definitely, there is liquidity, a funding challenge, and with the flight to safety that we've seen since Imperial and then Chase. Others would be income challenges, because with interest rate caps, the immediate hit on one's bottom line. So I'd say those two would be the main sort of challenges I'd say the industry is facing. Yeah.
And of course, bearing in mind that HF Group is the biggest mortgage lending company in the country, and we have seen banks also aggressively venturing towards that market. How has this eaten into your market share?
Market share, I'd say not too much, because see, the market has been growing, and we've been growing at the pace of the market. So we still pretty much have the same market share we had 2 years ago, 3 years ago. And what we have consciously done, and of course as we saw all the competition, was to consciously get into development ourselves, so that we could sort of create our market and then bank that market. So since 2012, we've been actively doing housing developments, and we continue to do those, and converting or banking at least 60% of what we're developing. So that has kept us at the top of the curve. Yeah.
And of course, the other time, I think it was last year or 2015, you announced that you want to now focus more aggressively towards the counties. And I remember you signed an agreement with Kakamega County. How many more counties are on the line?
There's several on the line, and I must say with the counties, it's work in progress. There's quite a bit of legislation around what counties can do and what they can't do. And a lot of that legislation, which is derived from the Constitution, then has to be passed through the respective parliaments. And until that process is completed, you really can't say you have a solid deal. But I'd say we have work in progress with about 6 different counties at the moment. Yeah.
And as housing finance, last year we saw the interest capping law coming to force. How is this likely to impact the demand of your product?
Demand has actually shot up because now obviously at 14% as a maximum interest rate, compared to say an average of 18-19% that was there before. It definitely makes it more affordable for more people to own homes. So on that end, it's a very positive thing.
Mhm.
Yeah.
And when you look at it from a bigger picture perspective, is it a good thing? Is it a bad thing that now we have a law capping interest?
We were very against it,
Absolutely.
and we're still against it. I
Mhm.
don't think our market should be forced, or rates should be forced down on a market. I
Mhm.
think we are meant to be a free trade market
Mhm.
based on demand and supply.
Mhm.
So I still maintain it's not a good thing.
You
Yeah.
still maintain that
Yeah.
it's not a good thing,
Yeah.
despite the fact that you have seen your loan demand shooting up.
Yes, demand may be shooting up, but again, it's about risk, risk weighting, or what's the word to use? How many of them are actually good credits
Mhm.
at that sort of rate? Are we willing to lend to everybody who now wants to at 14%? And the
Mhm.
answer is no.
Mhm.
So while the demand may be there, our ability to meet that demand is not there.
Mhm.
Yeah.
We'll be coming back to that question, but I want to find out at this point, what is the quality of your loan book?
Part of our loan book, and as we published in September, we publish every quarter. Our loan book, if you look at gross non-performing loans to total loans, is now in the region of about 9.5%.
9 to 9.
9.5%.
And this is in total of how much in figures?
Total is about 6 billion worth of bad loans. Yeah.
6 billion
Yeah.
worth of bad loans.
Yeah.
And it has been a growth path.
It is cyclical, because between 2007, I'd say all the way down to about 2013, it was coming down.
Mhm.
Then we had changes with the Land Act that made the whole foreclosure process more a lengthier process.
Mhm.
So as you are going through that process, your 90-day or your 180-day period clocks in, so you have to declare it as a non-performing loan.
Mhm.
But then you're able then to recover it once you have gone through the recovery process. The other impact we also saw around that time was the sort of war that was going on between the National Lands Commission and the Ministry of Lands and Housing at the time. And so a lot of delays in titling, especially for developers, because we finance a lot of developers who have sold their houses, sold their projects, but can't complete for those who have taken out mortgage facilities from ourselves or other players.
Mhm.
And so that time forces that project to go into non-performing until that process is complete. Excuse me. So it has been a cyclical sort of process.
Mhm.
Yeah, but nothing wayward.
Mhm.
No, I'd say nothing wayward.
We haven't seen a sharp spike.
No.
Mhm.
It's not,
So
not just
how
right.
do you plan to contain things going forward?
It is an everyday business. Managing non-performing loans is a day-to-day business. And again, it's about constantly talking to your clients. And again, you need to know whether you have somebody who is willing to pay but not able to for one reason or the other, and what sort of arrangement you can come up with. Or is somebody unwilling but able? And again, there's different ways to deal with those customers.
Mhm.
So it's something that we handle on a day-to-day basis. Yeah.
Mhm.
Yeah.
And what part of your NPLs would you consider to be toxic?
What do you mean by toxic?
Toxic in the sense that you do not expect to recover that loan at all.
No, you see, the beauty with our loans, the bulk of our loans, they're all secured.
Mhm.
And the outstanding amounts are less than the secured amount. So we know, worst case, if we're able to sell it, we'll get our money back. It's just a matter of time. Yeah?
It's a question of time.
It's a matter of time. Yeah.
Mhm.
Selling, the whole foreclosure process is quite lengthy. And then also getting the right buyers.
Mhm.
Yeah.
And in the past, you have really concentrated on the middle class
Yeah.
segment of the market, and you announced that you want to shift that your strategy going forward to see how you can focus even on the mass market. How has this come along?
No, it's working along well, and we're doing that in two fronts. One, from a pure banking, where we now have a full microfinance capability. So having brought in the right expertise, created the products, and opened up new channels to serve that end of the market. And then from the development side, focusing more of our developments now towards the more lower middle income. So where we're really targeting to get homes into the market at below 5 million shillings that make them more affordable. Yeah.
And you started off this project with some units in Comaroc.
Comaroc is the first two phases we did of Comaroc, phase 5A and 5B, when we revived the company in 2012, were more middle income, upper middle income, because those were going between about 6.5 to about 10. But the third phase of Comarock that we are completing, this is Comarock Heights. We're completing the first 500 units in June. That now is targeting that middle income market and low middle income market. Yeah.
And since 1992, you have been on this market.
1992?
Yes, housing finance, when you offered your shares to the public.
Oh, yes, yes.
Well, is this a decision that you look back and smile, or
oh, definitely.
does it make you gloomy?
No. We definitely smile. And we've had some very, very good successes with the stock exchange and with the capital markets. We had a very successful rights issue in 2008. We were able to raise 2.3 billion then, and really what had marked sort of the turnaround for this company. We then had a very successful rights issue again in February of 2015. We were able to raise again 3.5 billion. So for us, it has definitely been a very good experience. Very good experience, yeah.
Finally, I want to hear from you. You have also ventured into the insurance industry. And we know for sure that this market is quite small at about 3%. How do you plan to move forward into this industry?
Okay. Our first focus with our insurance agency, and we act as an agent, our first focus is within our own internal group. So within the group, we're generating a lot of insurance opportunities, both from all the customers we lend to, all the developers we finance, the developments we're doing ourselves, etc. So that's our first focus. So as the group grows, the insurance business also grows. And then from that experience or through our customers is get more business that way. So it's not really going out and sticking our heads out in the market direct, but starting from the known and then moving to the unknown.
Very good. And finally, when you look forward this year, what does it holds for your business?
I think this year for us, we are on the second year of our 2020 Vision 2020 strategy. So we just continue what we've been doing. We continue with our developments. We have completed our automation. We have a new banking product, banking system, and now we're rolling out new products on that, increasing our channels. So basically, business as usual. We just continue with our strategy. It will be a tough year, definitely financially, but again, we know this is one of many years to come.
Good.
Yeah.
Thank you very much.
Thank you, Brian.
Asante. Very good.
Good to see you again.
Asante, sir. Frank Ireri, Managing Director, Housing Finance Group, joining us here on The Trading Bell. This is The Trading Bell. We're back shortly. And there you have the figures of how the market performed in the last 1 week. Eric Musau is an analyst at Standard Investment Bank joining us here. Well, Musau, thank you very much for joining us. And of course, when you look at all the four indices of the market, they have made some slight changes. And when you look at who is actually behind these moves, the market is now being driven by local investors. What are the local investors seeing that the foreign investors are not seeing?
Well, actually, foreign investors are still driving the market, but local investors have increased their participation. So when January we saw participation was around 20%. Now we are seeing
it's about 30%.
30%, and that's actually a very important improvement. It shows the local appetite by local investors. And I think we're looking at the earnings coming up in the next few weeks, starting with BAT next week. but again, also I think the prices have fallen quite a lot, and I think there's a sense that the market could be oversold. So we're seeing a bit of bargain hunting coming through. Yes.
And of course, you have put it rightly that the market is still heavily dominated by foreign investors. But of late, we have seen local or domestic investors, also coming up in large numbers to a point where now they control about 30% of the market. Why are the foreign investors sitting ground?
Well, I think their participation is still they haven't changed much, and you can't say they've held back. I think it's just a matter of the local institutions starting to look at the market. So they're not really ceding ground in terms of the overall participation. You can say they're still active, but not to it's only that the locals are now coming up and taking a bigger proportion of activity.
And we have seen the market registering some changes in the last 1 month or so. Is this trend likely to continue, bearing in mind that we are getting closer and closer to the elections?
So we've seen a lot of weakening since the year started, and at some point we saw the market sort of stabilizing, and we've been sort of bouncing off the bottom. Some counters we're seeing starting to see a bit of gains. We saw Sanlam, for example, gaining a lot after the company withdrew its profit warning. Kengen, again, we've seen the price edging upwards. I think it's just more driven by demand. There's a lot of uncertainty around the banking sector, and I think until we see the earnings coming through and the banks offering guidance for the next year, I think we're still going to have a lot of volatility around that sector.
And of course, when you look at the top gainers, we have Sanlam Kenya. Of course, we know they record their profit warning. We have NIC Bank, Express Kenya. Apart from Sanlam, what are the fundamentals, that the other four that have propelled the other four?
Some of them are trading on thin volumes, and after hitting a low in terms of their pricing, we're seeing a lot of them starting to bounce back up. You saw Nation Media has been struggling, hit a low almost 70, at some 70, 75 level. Now it's moving up above 80 shillings. And really, investors are wondering, at this price, are investors pricing in too much negativity? And maybe this company is still worth something. So you're seeing a lot of these investors, especially for the counters which have weakened so much, investors trying to look at them and seeing whether they could make some money out of some sort of bounce back.
And quickly and briefly, I want you to explain to us, when you look at Kakuzi, what is not happening? It's one of the top losers. And of course also Lemuru Tea, both of them are in the agricultural sector. What is not happening?
So there was news about the price of coffee and generally the weather in terms of the way it's been predicted by the Met Department for most of this year. I think investors might be starting to price that in, but I wouldn't put in too much emphasis on that. I think the sector has experienced good pricing for commodities exported. So I think we still have some time to go to see whether the impact of weather is going to have a major impact on profitability for the agriculturals.
Musau, thank you very much for joining us here on the Trading Bell.
Thank you, it's a pleasure.
Eric Musau is an analyst from Standard Investment Bank, helping us to crunch the figures and of course interpret the data for us. So watching the Trading Bell, we are back shortly.
A broker from a talent point of view, in terms of the people who work in a brokerage firm, you can say you have different people who work in a firm, and you have the person who faces the client and who actually enters your trades. When you say you want to buy a particular company, the person who enters the trades, that's called a dealer, and you can consider him a broker, and they're the people you see in red jackets on the trading floor. And these people are experienced in finance, and they essentially ensure that that the trades, once they're done, they actually get completed at the end, and whoever has sold gets the money, and whoever has bought gets the shares.
From the housing market to the exchange market, the market train comes to a halt right now. Thank you very much for watching The Trading Bell. My name is O'Brien Kimani. Always, we encourage you to get in touch with us. Our SMS line is 22162. And always remember to start with the word base. And the Facebook page is The Trading Bell TV Show. And the Twitter handle is @Trading Bell. My Twitter handle is @O'Brien Kimani. We take you now back to Broadcasting House for the continuation of Business Insight. Have yourself a good time ahead.